students in accounting education university, and today in this class I will teach you how to better understand of debit and credits, which account will be debit and which account will be credit is a very important decision if you want to pass accurate journal entry. If you pass wrong journal entry, it means you are doing a biggest mistake, because its effect on your final accounts, your financial statements. So never do any mistake. You have to understand it better way. There are two approach. One is the US approach and second is the Indian approach. In the US approach, very simple. We focus on the assets and liabilities. If increase in the assets, increase in the assets will debit, okay, and decrease in the asset will credit, okay. Which account will be debit? If we see that the asset comes in the business and it increases the value and quantity, so that account will debit. And if we see the asset has decreased, we will credit it. Second, liabilities. Debit, decrease in the liability and increase in the liability will credit. Simple tools. Now these four facts included in liabilities. I teach you loan. Loan is a liability. We take a loan, we have to repay the principal plus interest, okay. So our responsibility to repay the loan. So if we took loan, so loan account our liability and it has increased, so increase in liability is credit. We have received the cash of bank account is asset, bank account debit, and loan account credit, okay, due to this rule. And capital is also liability. Our business is liable to repay the amount invested by the business owner. Business owner is a different from business, two type identity. So increase in the capital, the business owner brings the capital in the business. So this is a capital account. Increase in the liability, capital account, this will credit. And cash account debit. Cash is our asset increased, okay. And now next, income is increase in the value of capital, increase in the value of capital. And capital is liability. So increase in the income must be credit, because it increases our capital, business owner's capital. And decrease in the So next we can pass the journal entry for this. Suppose we receive the dividend, cash account debit, and dividend account dividend account credit. Suppose you receive 10,000 dividend. Okay, cash is our asset increased, and dividend is income is increase in the capital. So increase in the capital is increase in the liability. So this rule will apply. So expense, what is expense? Expense is a decrease in the capital. Suppose we are electricity bill we have paid, but we did not get any revenue, so our capital will decrease. Suppose we have the 10,000 capital. If we never receive the income in 10 months, every month we are paying our electricity bill, our 10,000 capital will consume. So this is a decrease in the capital. Every decrease in the capital means decrease in the liability. Decrease in the liability must debit. So expenses account debit, and if we pay the cash, asset decrease, so decrease in the asset will credit. Expense account debit and cash account credit. Okay. So these are the rules, and drawing is also decrease in the liability, and decrease in the liability, drawing must debit. Okay, and now come to the Indian approach. Personal account. Who is a receiver? We forget it. Asset and liabilities. We just focus who is a receiver, and credit is who is giver. If we sell the goods to Sham is the receiver. Okay, Sham is receiver. Sham account debit, and we sell the goods, it means sale. In case we sell credit, credit. Okay, and who is given credit? Suppose we bought the goods from Ram. Okay, on the credit. So purchase account debit, Ram account credit. Okay, now second is real account. Debit, what comes in? If in this case we have received the goods, this is our asset, this is debit. Okay, suppose next more detail, we bought the furniture, account debit, and real account says what goes out, means we paid the cash account credit. Okay, cash account credit. And next, nominal account, all the expenses and losses debit, all the incomes and gains credit. Suppose we pay the bill of internet charges, it will debit or credit. It is our business expense, all the expenses and losses debit, so it will debit. And next rule will apply, what goes out? Our cash, our asset, current asset goes out, so cash account credit. Okay, cash account credit. Now incomes and gains credit. Suppose we receive the interest on our FD. So इंटरेस्ट रिसीव किया हमने, यस, इंटरेस्ट रिसीव्ड, whether it will debit or credit, it will credit, it will credit, it will credit. And which account will debit? We receive interest in our bank account, so our bank account debit. What comes in? Our asset, bank balance increase. So bank account debit and interest received account credit. Okay. Even one more. If drawing either you can it is expense also. It is expense, personal expense. So personal expenses are also debit. Personal expenses, all expenses and losses are debit. Where the business owner repay or not. Drawing account debit. And what goes from our business? Our cash asset. Cash account credit. Okay. Hope you will understand these concepts, how to better understand debit and credit. Okay. Thank you very much.